Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thank you, Marty. And how are we doing in YouTube? And thank you, everyone, for visiting the Trader Lab. And please don't forget to give a like down there. All right, thanks, Nikos. Well, welcome everyone to Trader Lab. I'm your host, Tom B. Thanks for visiting this pre-Thanksgiving. I guess it. Actually, what I'm thinking about is pre-Thanksgiving, but as you recover, if you're in the U.S. from the carb stupor, don't forget there is the special Black Friday event coming for all of you who are interested in taking advantage of special pricing for Bookmap. And we'll be talking about that a little bit. And I still don't know what those prices are going to be, but I do remember previously when they've offered this that it's one of those things that if you ever wanted to try Bookmap, this is when you ought to, as they say, stop, look, and listen. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper like we do at the start of every stream. Statistics, probabilities, gaming theory. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is for educational purposes only. However, if we get into real time, as they say, we'll talk. Now, get your pen and paper. Take down a couple of notes. I also have a couple of brief announcements. Now, this is a Trader Lab. What the Trader Lab is, it is based on aligning order flow with a high-tier tool like Bookmap with market mechanics. In other words, how the market works, why it does what it does, and how at times you might get in alignment with it with a vetted, structured trade process. In other words, the business of trading. Structured trading is really waiting for your trades to show up that have a statistical edge. This is what the Trader Lab is about, and really, I believe almost anyone can learn how to trade if they invest the time to actually determine where they should interact with the other participants and if they have a statistical edge. Business of trading is not a predictive business. It's really more of a gaming process, similar to how casinos operate. Think about how successful casinos are. Even though they pay the gamblers and they have other expenses, cocktails, buffet, maybe flying gamblers and whatever it is, and yet they still net a profit. Now, if we look at how they succeed, which is only playing games that favor the house statistically, and they play the games exactly the same way, and they accept that they have no control over the card coming out of the deck or how gamblers play the cards, but they do have control over the games they play and how they play them. So we have a successful business model. No question about it. Now, the thing comes, can we build a business and layer it on top? In other words, a process that emulates a successful business, and then adjust what we do to that business so we're not creating or reinventing the wheel. We're actually going to potentially run in a track that has grooves in it because it's been on that track, and gaming has been on a successful track for maybe centuries. So something for you guys to think about, and that is the process that is shared in the Trader Lab. It's about the business of trading, and I believe, personal belief, and I've been trading going on 45 years, both professionally and otherwise, out here with you, that if you approach this like a business, and that's what Trader Lab is about, creating career paths. And while past performance is never indicative of future results, your mileage may vary. You have to do the work. You have to develop the discipline. And I believe many traders have the opportunity to move their journey forward, if you will, their career paths, and maybe create an outcome that's different from most retail traders who are pretty much doing the same thing. So let's go on from here. And thanks again for visiting the Trader Lab. Now, there's a couple announcements I have to give you, which I think it's pretty important. Remember, we have 2 days to go to elevate your trading, a Black Friday sale. I like sales, don't you? Well, will be your chance. And remember, mark it on your calendar. Check out bookmap.com. Also in the chats, in the Trader Lab, and elsewhere in the Bookmap server, there's going to be announcements about the special pricing. Now, I don't even know what it is. They won't even tell me. So it's going to be, I am told, though, it's going to be significant. That's all I know. Now, if you've ever wanted to try Bookmap, and I'm really not here to say everybody ought to have Bookmap. No. But it's about edge. So it's about understanding where can you extract an edge. And now for me, and it's just a personal thing, I wouldn't trade without a high-tier order flow tool like Bookmap. That's just me. I'm not saying you need to have Bookmap, but I'm going to say is this is a business of edge. And where do you create edge? Well, order flow. So there you go. So if you don't have a high-tier order flow tool, if you want to take advantage of it, check it out. Okay, Black Friday. Now, there's one other piece, then we'll get right into it. Don't forget, grab the pen and piece of paper. The Bookmap Academy is a no-cost coaching and mentoring program for serious traders. And to make it interesting, what happens in the academy is traders can bring screenshots of the trades they take so they can be coached and mentored on either what they did right, what they're doing right, what they might do better, whatever it is. And you can participate in this, and there is no cost. Now, here's the interesting thing. Every month there's a winner, and they get what's called the coveted blue jacket. What's a blue jacket? Well, when you're in Bookmap, in the Bookmap servers, it really lets everybody know that you have participated in the academy and you're a winner. And it's quite competitive, but look at the opportunity. 3 months of Global Plus with stocks or futures data. A month of the Discord Nitro, which is pretty cool if you haven't tried that out. And now here, to me, I think is the real special thing. One-on-one coaching session with me. Now, as most of you probably know, I get requests all the time for coaching, and most of the time I'm not able to do it, but I'm always interested in helping fellow traders. I have a passion for that, and it's really because of what I went through, the years I went through where there was nobody to coach me, no mentoring and no education. It was, hey, get a book or we'll see you later. There was no computers even and no internet, so we were kind of out in the desert. Thirsting for information and education, and back then it didn't really exist. So their learning curve was very slow. So traders who come to Trader Lab and elsewhere are always reaching out to me for coaching, and I just because I'm a full-time trader, I just have a very limited opportunity. But I am making myself available, and Bookmap asked me, would I be willing to do one-on-one coaching with the winner of November's Blue Jacket competition. So yes. So this will be something special. And what it's going to be is whoever wins, I will do a deep dive with them specifically to attack the issues and to help them develop a better understanding of market mechanics and structured trading so they can understand that what the business of trading is. And it doesn't matter how long you've been trading. It doesn't really matter. Everybody can improve. So if you want to take advantage of this and you haven't been part of the Blue Jacket, you haven't registered, there's still time to get your submissions in, and definitely do it before the end of the month. That's all I can say. And of course, if you want to speak to me, you want to reach out to me individually about trading issues, I'd be glad to have a brief conversation with you about it if I can help. And again, it's very limited. So if you're interested, you can DM me in the Bookmap Discord server. I'd be glad to visit with you briefly. Maybe I can give you some ideas on what you can do to improve. But if you're interested in a one-on-one coaching session, and this might go for an hour, minimum, maybe longer. It all depends where we go, and I'd be glad to meet with you. Thanks again, guys. And by the way, don't forget, I will not be streaming on Friday, Black Friday. I'm going to be busy shopping for Black Friday deals, and I hope you take advantage of Bookmap's Black Friday deals if you've ever wanted to get your hands So there, let's go. And thanks for your patience here. Let's get going. Now, let's get back to the RTH Open. Now, I was going to give you statistics, so we got to get back to the Open and kind of look at what happened here today. Now, as you know, in TraderLab's about, as you know, gaming theory, understanding the business of trading. The business of trading is not, let's make it up, let's play a video game. Well, it's not that you can't do that, but TraderLab's more about longevity and career building. So, you know, I always think if you want to gamble, go to casino, be sure to get the cocktails and the ticket to the buffet. The business of trading is really different because the business of trading, remember, if we're using casinos as a template, then we've got to approach this business like gaming. If you accept that we're in a random, uncertain environment. If the casinos can operate and generate net profits in the same environment, basically, then why can't we? Maybe we're not approaching it the right way. Maybe we're approaching it like needing to be right and predicting and loading indicators on to create certainty or quote confirmation. Is that running through your mind? Is that what you do? Well, my experience, because I've done the same things you've done, my experience is that doesn't work. At least it's not sustainable. The catch-22, and you all know about catch-22, the catch-22 in a random environment is random success without an edge. And this is something we all suffer through. Things work. We get runs. Gamblers win. But the house over time extracts the dollars from the gamblers. So we are going to have winning, of course. So that keeps us on a track of trying to fix something. And I like to preface what I do here so you understand why the Trader Lab exists. In fact, I did a webinar, and yesterday it is posted. I made it public. Typically, these streams are not available. And it's why the Trader Lab exists. And I suggest all of you guys watch that stream from yesterday. In fact, if one of my cohorts there in the Trader Lab or Bookmap support, could you please post that link in YouTube for our visitors today? It's why the Trader Lab exists. Now, statistics. We're opening lower, so there's yesterday's settlement, inside of yesterday's range. Hold on. Let me make sure everything is working here. So there's yesterday's high. Now, this is yesterday's point of control. Now, here's some statistics. Write these down. Remember, probabilities, statistics. What is the skew? And what are statistics? Why are they important? Because we are playing a business, if you will, that is statistically based, not predictive. Forget prediction. If you're trying to predict something, you're in the wrong business, in my opinion. You need to have your mind in a place where you accept you can't predict. What you can do is align. It is a psychological aspect of being in a completely uncertain environment. When we seek certainty, we are responding to psychological needs to be right and to not lose, and that's fear-based. That is, hide. Jekyll and Hyde. Who is hide? Avoid risk. Stay away from that potential saber-toothed tiger. And that causes us to go on a pilgrimage to certainty and confirmation. That is not the trading business. It is also not the casino business. So the probability of getting to the previous point of control has about a 70% probability. Past performance not indicative of future results. All statistics from any place on the planet you have to vet for yourself, including here. Getting to the ETH mid, 83% probability. Getting to the overnight volume point of control. What are these things? Overnight volume point of control is the highest volume retail price from the ETH. High volume is like shopping. So just think the auction. Remember, this is auction market theory. So what's the auction? Why do we even have that? Why do we even have an auction? The purpose of the market, basically, is to find out what's too high, what's too low, and what's fair. And the thing about that rotational process or consolidative process is the market does it in all fractals or time frames as you think of them. I don't think of time because the behavior of the participants, they don't punch a clock. It's not on the clock. It's on the interaction. And then they either leave that area and go somewhere else or they hang out when they find fair. So in the ETH, this is fair. Okay? So let's keep going. So statistics first. The microcomposite volume point of control. What is this thing? This is the same as this, the naked volume point of control, which is yesterday's retail price. But the microcomposite is the next time frame up as you think of it. So it's the consolidation that we're trading into from the previous overlapping days that we're trading inside of. Okay? And then we have the ETH low. Write these down. Why am I taking the time? Let's get on with it. You want to see trading. Guess what? This is trading. 66% probability. Taking out the previous low, 53% probability. So the skew initially might be to the upside. However, context is number one. So the idea, since we don't know what's going to happen, is to have the probabilities. And the probabilities, don't forget, is to take out yesterday's low, wherever that is, and I don't see it here, but it's probably under here someplace. Let me look. Where is yesterday's low? I think it's down here. Is this yesterday's lows around 60.10? Trader Lab, correct me if I'm wrong. And we have our next target down around 60.006. Not a recommendation. Is that correct, Trader Lab? Because it's covered up here. Yes, it is. Thanks for a lot, Tony. One moment, guys. Just trying to check everything out here. How we doing in YouTube? Please give a thumb up. If you have questions, please post them. I'll do my best to get back to them. RTH open. Now, what we're looking for is a couple of things. First of all, who takes control? Now, what do we know? This is the highest retail price in the intermediate time frame. We checked it in the ETH. Too low. Watch. What about yesterday? The RTH opens here. Don't forget. Overnight mid, high probability. Getting the settlement, high probability. And getting here, high probability. And taking out yesterday's high, potential. Right? And then the all-time high is here and the ETH high. So it's kind of bracketed. We checked the ETH high, which was aligned with the all-time high. Maybe too high. Popped over yesterday's high. Maybe too high, and I say maybe because I don't know. You know? Check this. The ETH low. So we are bracketed in here. This is the open. Now, why am I spending time? I know you want to see trades. Guess what? This is the pre-market preparation. Statistical probabilities, and then your job is to attempt, underline, to get in alignment with the developing structure. Subject to trades you have vetted that have a statistical edge. And if you don't have a trade that has a statistical edge, you work on your crochet until the trade shows up. And if that's something you cannot do, then you're gambling, and that's okay. But I would suggest you might not want to anticipate longevity unless you're the exception. And statistically, for retail traders, that might not be so good. And of course, it's not a recommendation. You have to look at your own results, how long you've been doing this, and are you waking up a trader Groundhog Day? Trader Groundhog Day is when you're doing the same process, looking for a different outcome, and you're waking up in the same place. That was me. Work hard, adjust, tweak, do whatever, and then have a sequence of winners or losers, same old thing, but see over time, I was just waking up in the same place. If that's you, you should come to Trader Lab, because that is not going to change. And it has nothing to do with your effort. It has to do with your process. And because we get intermittent success with anything, even a dartboard in trading, I mean, if you were just throwing darts at a board that said buy or sell, and you still had winning trades here and there and along the way, of course, and losing ones, would you keep throwing the darts? But that's what you're doing if you don't have a consistent process that you can measure. Casinos don't do it that way. So let's look. Market opens here. This is RTH open. We're in 10 seconds. Nothing to do. Market opens up. Where are we going? Well, I'm thinking if we're opening here and what we already did below, I'm thinking longs because my statistics and the trend suggest I'm going to go up. 30 seconds in. So if you've been following the stream, you know that the possibility is we get what's called responsive selling. In other words, profit taking on the open. Maybe get some shorts in here, and then we're going to look for a opportunity to get long somewhere. And the joy in trading is where. So my statistics are favoring, in my opinion, upside because that's the trend. So let me mark some things here. Now, I call these, and I made this up because I started doing this a long time ago, mid-'80s market profile. Before volume profile, we didn't have volume. And I started, of course, like everybody, researching, experimenting, and giving it a lot of serious thought, and trying to use my indicators that I was using in my systems, which I had tremendous belief in, even though they were not consistent over time, the possibility of integrating them and having something better. The result was actually the opposite, just so you know. So here's what's going on here. This is called the distribution. And all it is a consolidation. You can see it. Here's the outside edge. Here's the outside edge. Here's the outside edge. There's the outside edge. And I break away from it. At the moment, that is saying, remember, this is language. I don't use indicators. So how do I do this? I'm the indicator. Basically, what I'm doing is the same thing your indicators do, except I think I do it much better because I can interpret this here. Your indicator will eventually say maybe, oh, it's going down. Well, if I understand this, the language, I can then react much faster. And because I understand order flow, I can understand what's happening right here, which I won't know until here. But is that better than an indicator? Considering it, what did it take? I'll just give you an idea of the time, what the order flow might give you as an advantage. 8:30 and about 15 seconds in, I already know this is too high. That's order flow. So what happened here? Some buy stops. That's nice. And why didn't we go up when you see a green bubble? This is aggressive buyers, delta. And right here, it looked, you don't know here. But what I see here is, why did the market go down and why am I under this seller? Because the sellers took over. There was a passive seller here. And when I break here, I see my buyers and I get my counter rotation. Watch the microstructure. I'm just taking you down into the subatomic electron microscope. I want you to see how order flow can help you and why order flow might be a real advantage over other traders. This yellow line is the retail price. In other words, right here, too high, too high, too high, retail. What's happening right here is the shoppers are rejecting these prices. Now, I'm only in about 16 seconds, and my sellers are here, my buyers are here. I break low. I get my buyers here. Don't forget, there were buyers there, right there. That's why it went up. And if I can't get over the sellers or over this right here, these buyers are now under the bus. This yellow line right there is too high. I'm not paying that. Buyers are here. Sellers are there. Sellers are there in the order flow. Hasta la vista, baby. Thanks for visiting. And this is when your broker sends you a gift basket. Is everybody tracking? That says it's going down. Did you know that? Order flow. Yeah, Sunjo, I can't answer about India, but you can go to the Bookmap server and inquire in there. And as far as a newbie starting to learn Bookmap 365, I suggest you come to Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. You will learn how to use order flow. And there's a lot of additional education in the Bookmap server specifically focused on order flow processes and gaining insight with this tool. There's a lot of aspects to this, and I can only briefly cover them here in the stream. But if you really want to do a deep dive, there's a complete program of education and continuing support in real time. So this is too high. We break. This now is the distribution. This is an outside edge or low volume area. What this says, now I'm interpreting language, that this right here separates them. It's called the low volume node. So my suspicion is that we are going to go higher, but right here I'm in the state of maybe. Because, and why, I fell away from this, and I'm looking for it to go up. I know I have targets below and I have targets above, and I opened in between, but lower. So it's a mixed bag here. So let's look. Too high, variable high volume node, break low. This is the new retail price. This is too high, separated by the low volume node. Basically, this is a consolidation. See you later. New location. Now we have a couple of possibilities. We have VWAP in mid, and this is our resistance. And then this is an outside edge of the consolidation. This is all auction based. So now, what do you do? Great question. So right here, here's what I know. This is the opening swing high. Let's not forget that. And this is now going to become the opening swing low. There's buy stops up here, and there's going to be, well, we don't know where we're going here, okay? This turns out to be the opening swing low, and I have no clue. So let's watch. So, and I have no trade here. So, because right now, I have nothing. What I know is this might be resistance. That's what I know. If I come across here, the possibility exists to come here and come back here. That's called mean reversion. Let's see what it does. And what it does is right here, well, this is absorption. I come across, I pause here, and I am bullish on this thing. And I come across here. This sets up an interesting scenario. Now, I have an advanced structure here, and this is how this works. And this is now a structured trade, but it's not a basic trade. It's much more an advanced concept. Now, in the stream here, I like to keep it more basic, but if you're in Trader Lab for any length of time, and you've developed an edge with the basic structure trades. When I say basic, they're advanced compared to almost anything else you'll find out in the trading world. But to me, they're more fundamental. But don't think when I say fundamental that I'm not saying advanced. This is more advanced. Here's how this works. This is resistance, remember, and this is resistance. It's too high. This is the new retail price, and this is now your resistance, right? Right here, if I can't get above this, it could be a potential continuation short to yesterday's low. I break high. This is the last location where it might be a short, right here. And it breaks high. Once it breaks high, my next area of resistance is here. Notice the pause. If you took a long on this crossover, you'd be going here. I had no long, so nothing for me. Because I'm going, well, this is resistance. I just don't trade here. So when I break above this, now I've gone above the resistance. There's the level. Back at the open, back at the overnight volume point of control, and I'm testing it from the other side. Now I'm going to show you a long. What happens here? Let's go to microstructure. Buyers are here. I have now a seller here. I've got my resistance here, and I've got my buyers here. Order flow. Now, I don't know what's going on here because that's resistance. So I have sellers, and I got buyers. micro consolidation structure. I'm going to label this for you. I'm only drawing these lines so you can see what's going on. So I have resistance, and this is the retail price in this auction. And this is what this is. When you see consolidations, it's buyers and sellers interacting, and this is where the volume is. In here, this is like your store down the street. If this price becomes too low and we break away from it, it becomes support. That's long, in alignment with this, multiple time frames as you think of them. Now, where's my statistic? Let's go back. You wrote these down. I hope this isn't too complex for you. Why would I do this? Why would I even trade this way? Because I have statistical edge because I have probabilities. I certainly don't have guarantees. So I only trade where I have a statistical edge. I mean, the casinos only play games that have a statistical edge. They don't make them up. I mean, when you're trading, you just making it up as you go. I don't think if you owned a casino, you'd stay in business that way. But just an opinion. Overnight mid, 83% probability. If I get long here, that's my scale ahead of there. Now I have statistics up above. Let's look at them. I had my opening swing high, right? Dang. So I am going, let me show you where we're going. I'm going for the previous settlement, and the target on this trade then is the naked volume point of control. Now, why would I do that? 70% probability. And remember, you got to bet these for yourself. So this is trading. What are you going to do? So long, risk neutral, helmet. But what happens here? Let's look. Now, nobody knows. So let's not think we can predict. Again, if you can, come to Trader Lab, help us do it. I've never been able to predict anything. I can get an alignment, but I can't predict anything. So right here, let's look. So sellers are here. This is your long, right? To the mid, overnight mid. Now, right here, I have my buyers. I got my buyers here. I got my buyers here. I got my buyers here. I got my buyers here going to the moon. I got my buyers here. So I got buyers here, buyers here. I'm at an outside edge here. So right here is my support, right in this area. And this is where the buyers are active. Microstructure is, let me show you this. I use the order flow and the structure of the auction. So right here, chop, chop, is a consolidation. I'm going to put a little box around it. I want you to see just how you can read this. I kind of look at this like language, because when we're looking at order flow and price action structure, what creates the price action? It's the participant behavior. So the buyers are here and the sellers are up here. And as long as I'm holding like this, and even if we pop down in here, I know my buyers were here. So as long as I'm up in this area, I have no reason to think we're not going higher at the moment, because my buyers are here. And this was absorption. You see the icebergs? My sellers are here. And as long as I'm above this, why wouldn't I think we're going higher? Until I break here. Once I break here, I know the possibility exists of the following: counter rotation, continuation, or reversal. And I don't know which one at the time. What I know is this is my support, my outside edge of this structure, which is an auction. So since I'm trading the auction, when I see this, now I have to get back over here, or else see you later, send a postcard from the edge. And notice what happens. Boom, test, where the buyers were here, break, sellers take control. These buyers up here are under the bus. These buyers now here in this leg are under the bus. Break low, test. Now you have two choices here. Exit here on the break, and you'd have a runner. So you'd have long to scale, risk neutral, and exit. You'd pick up burger and fries or whatever, subject to your plan. Trade management is an important aspect of this. Now, remember what support was here. The long setup over here, the scale was here, and then you're going, wherever. And then trade management. In fact, I mentioned in the Trader Lab, what is your trade management? The components of successful business plan are the operational aspects. And in trading, you have to have a vetted edge. In other words, where do your trades show up? They need to be in alignment with the current context. If the context changes, you got to turn the barge around and adjust to it. You have to get risk neutral, and you need statistics to know the probability of getting risk neutral before taking a full stop. If you get risk neutral, then you're going to manage your trade per your plan, get to your target, or get stopped on a trailing stop or whatever. And everything is random. So let's watch. Too high, break. This is now a change in behavior. It is called mean reversion. This is the mean. Nobody knows. So when you're here, you're in a directional trade. When this fails, you're coming back here. So you have choices. Exit the long, possibly take a short, or just hang out and go, what's going on? Let's watch. Watch where the resistance is. So what was a long here becomes resistance. There's also a low volume node there, outside edge here, outside edge here. So too high. I'm going to label it so we don't forget where it is, low volume node. So what I'm doing is I'm using consolidation as auctions, which is what they truly are, So if this is too high, that's why we left it. If this microstructure here is too high, which is the area for that long, we left it. I'm not paying that. This now is too high, and we have the mid, we have the VWAP, and we have what was too high was this, and this was our trigger. That's resistance. When we pull back here, if you have a plan for this, then you have a potential short here, or you have nothing. And what is over here? Outside edge, too high. So, look, before we get there, let's look at the structure. Too high, fall out. Back here, what's this? Low volume node. It's right there. So right here, you pull back. Now, right here, do we know where it's going? No. But let's look at the microstructure. Right here, chop, chop, sellers are here, buyers are here, exhaustion, sellers are underneath this buyer, potential microstructure. We're just going to label it. I'm getting down into minutia. I know. Watch. This is what you're leaning on, and your stop needs to be out here. Let's look. So you're leaning on this, mid is here, and your stop needs to be out there. So what you get is a short in here or over here with your stop, and then you're going here. This is mean reversion. It's the same concept of this, but you wouldn't know until you get this. Then it's outside in, and the longs that have their stops under here are now the target and the fuel. So let's keep going. So right here, too low. If you took this or this is your target for scaling, and then you'd get stopped out. Okay? We're in two-sided trade. Maddening. Gotta tell you. This is my least favorite condition. So here was too high. So we pop these guys out who are short, and we get another selling structure. Let's look at the structure. So this is kind of nasty starting out. Micro high volume structure right here. Notice where we come. Sellers hit it again. I come back and test the micro high volume. It's right there. Now the order flow is saying long, long, long. There's the trigger. Where's the volume? It's right here. Same location. I come back and test it. What happened here? Buyer under the bus. Test. So I just come back and test it. This sets up a short in the trader lab, and you're going for what's called mean reversion. And I always say it's mean. Notice where we come, test. So we're testing. Let me draw this for you. Now, what happens when you're learning to think like this is it's counterintuitive in a lot of ways. But you need to understand the language. So what this is language. all your indicators do is translate language, and they don't do a good job, really, because they're conflicted and you're trying to do it in multiple time frames and create certainty. I'm not certain of anything. What I am certain of is that the market checks prices, how it works. And if I can interpret behavior like this, why does the market leave it? Because it's too high. And with the order flow, I know the buyers are here and I know the buyers are here. When I break below these buyers, anybody who bought in this has a problem. And why didn't we go up here? Well, I don't know until I break. Now I know there was a passive side here, and you can see the limit orders of the icebergs. Come back and test. Do these sellers see this as an opportunity to sell more? That's kind of the way I think of it, and yeah, they do. I pull back. Where am I pulling back? To where the sellers were in control. Here. What's my microstructure? Let's go down in time frame as you think of it. Where's my volume in this auction? It's right here. What happens here? Trigger, test to the outside edge, shorts. All these are shorts, okay? So short here, just follow now. And where's the stops? You remember, under the opening swing low. Now, this is support, variable high volume node. I got to mark it. And it's also, you got to scale ahead of that or ahead of this, either one. Variable high volume node. And this is a two-sided auction, so it's a little tougher to trade because you're going on both sides. But the market is long. And if the market is long, notice the scale would be here. And now this is resistance. Let's just keep going. Too high, break low, resistance. Now watch, this is support. That's why you scale here, okay? Now I pull back, mid VWAP, I have resistance here, resistance right there. I break low. I'm going to take out the low of the day, and my next statistic down below is yesterday's low. That would be very interesting if we can get there, don't you think? The yellow line is called the point of control. The point of control is the developing high volume. And if you think of this like shopping, really all we're doing is really shopping for S&Ps. And of course, you know the saying, buy low, sell high, buy low. Next target is 24. That was the highest volume retail price. Let me see what else we got here. There was something else here. Oh, in the ETH low, which is here. So this is a target, ETH low, high probability statistic. Let me see if I can find that one for you. Remember, all this is available in TraderLab. It's about a 66% probability. Past performance, not indicative of future results. All this is what TraderLab is built on, probabilities and statistics. So if you had this short or this short, this anywhere, trigger, back here, short, all these are TraderLab structured trades. Now, the thing is, structured trades are something you would vet. Not every trader takes a trade at the same location, right? But if you understand how the market works, you have a lot of options as far as what you can do. This is a high probability target. You would lay one off here. You could be done with the trade. Yesterday's low. What's under yesterday's low? The market is long. That means there's stops in here. So we have longs in the market. Now, yesterday's low is about a 53%-ish probability. So that's not a high probability. But let me ask you this. If we didn't get to yesterday's high, and we have a statistic that says there's about an 85% probability we'll take out either yesterday's high or low, and we're going south of the border, what does that suggest to you? High probability to take the ETH low and high probability to take out yesterday's low, and there's more. This is TraderLab, guys. Now, sometimes it's a thing of beauty, and other times it's a thing of wear a helmet and try to get an alignment, and this is trading. So, shorts, break, test, high volume. Notice where the high volume is. It's here. In the microstructure, going down in time frame, the buyers are here, the sellers are there. The sellers are here. Break away. Test the micro high volume, which is right in there, and there's your test. You see it? I can go down into fractal. I call them fractals because it's not regulated by time. That's all. Okay? This is a consolidation, this little thing here, and sellers are there, buyers are here. Break away from it. This is too high. This is a fractal, and it's a potential, if it pulled back here, add, short, or trade management opportunity. Breakdown, going again for the ETH low, statistical target. Target here, right there actually. Let's watch it. Absorption at the ETH low, counter rotation. Now, this can be the low of the planet, or since I have an 85% probability of taking out yesterday's low, what do you do with this? Do you exit here? Well, if you're out of bullets, yeah, you would. Now, what's your job? High probability of taking out yesterday's low, but now you're out of bullets. Why would we get out here? Let's look. First of all, target. High probability, and I always say two, 3 ticks ahead. What do I see here? Let's go back to order flow. We anticipate buying here. Look at the icebergs going off. 800. There's almost 1,000 icebergs, right? There is 1,000 icebergs here. The green that you see right here is absorption. So I can tell with the stop and iceberg detector, 370 stops coming out, 558 stops coming out. This is, look forward to the gift basket from your broker and that absorption. So this red delta are sell stops because they become market orders and new sellers. Good luck with that. Microcomposite volume point of control is support, and ETH low was right here. So this is a support location. So this is a great spot to take a profit. Now, let's continue. What do I know? I know we broke away from this consolidation. I'm going to put a little line here, called it a low volume node. Outside edge of the current consolidation, so that might be an area to come back and test. Again, clueless. Why am I clueless? Because I don't assume I know anything. What I do know is how the market works. And up here I have this other one, okay? So I got these areas. And what is a low volume node? It's a separation of a distribution. So I got a distribution here, and what it basically says is too high, too low, too high, too low. And inside of this is the volume right there. So think of them as stores. I relate this to shopping because in reality, trading is shopping. Are you a good shopper? We're shopping for S&Ps. And in all time frames as you think of them, or fractals as I think of them, there's this auction going on. I mean, look right here. There's volume. There's a micro trigger. There's a test, too high, we come down, sellers. This is a micro auction. I trigger, I test. Now, this is the kind of thing when I do coaching that I help traders understand. Microstructures, trade management, to read the auction. Again, no indicators. Where's the indicator that I use? Between my ears. This is a language. And like a musical instrument or a foreign language, you can learn to speak market. If you can speak the market, you can react much quicker and define where behavior is happening and when it changes. So there's behavior here, absorption, which we know because of the icebergs, and then I see a change. Do you see this move? When's the last time you saw something move like that? It was over here. And all we did was come up to resistance here, which set up a short. Here's continuation, test, continuation, test, continuation, test, continuation, break. Warning, Will Robinson moment, support, watch. Now it could do anything, right? Watch. So what do? Break high, high volume structure, break low, come back and test micro high volume right there. So this is how this would work. You, subject to your time frame, when we break up, you'd be out of your trade, or your and this is where individual trade plan comes in. So I have no opinion. I'm just showing you structure and structured trading, and then you adjust it to your psychology. Some traders are going to jump out the window right here. Other traders are going to be sitting back going for the statistic. What is your plan? And both are correct, because the previous low, which I forgot, I don't know where it is here, has that high probability. So for me, and this is all posted in Trader Lab, I'm looking at 16 and I'm looking at the high probability, 85% to take out the previous higher low. So for me, going south of the border. For you, you might get out of this trade and then get back in if that's your time frame or fractal. And I have no opinion on these things, because my trade plan is not the same as yours, and it shouldn't be. Here's my resistance. Here's my trigger. I come back and test. I'm at this high volume. Where does this trade fail? Out here. Out here. Okay? If you're initiating over here. So where am I trying to go? And by the way, if you have questions, post them. Yesterday's low, right? Down here. Now, this microcomposite variable high volume node at 16 is the same thing in a fractal as these variable high volume node, just higher time frame. So I'm going for yesterday's low, and if I'm using this for structure right here, this is my last area that was too high here. Now let's keep going. Microstructure, and again, all this is up to you, not me, you. Where was it too high? You see the little notch there, that high volume? That is a rejection of this microstructure, this consolidation. Low volume node there, low volume node there, and it's an auction. Too high, too low. Retail. I'm not paying that. Everybody gets in the car and drives to the next store. Too high, too low, too high, too low. I'm not paying that. Out. Lower. And as far as we know, going here. No way to know. So where's the last location? It's pretty much right here that we rejected. So that's resistance. Absorption, no clue. Remember, nobody knows. Hindsight, we know everything. Foresight, not so much. So here, we take this out, the trade's over. Now where to? Now we had a conversation in Trader Lab about this. There's two locations. Here, high volume, and up here, back here, low volume. So the stops are going to be where? Above this swing. So if we get a counter rotation, you're going to get this shorts in this leg covering, and their stops are going to be up in here. So we know that if we come across these distributions, then we can come up to the low volume nodes. And again, we don't know. This is part of the joy of randomness. You can't say you know what it's going to do. And again, if you do, come to Trader Lab, clue us in. But we know what it might do. And we also know in Trader Lab why, and we know where it might come. So we anticipate trades. We're not making them up. We don't know this. We do know where it might go and why, and then because we have structure. So let's just look at this thing. What is this? Where are we in alignment right now? Chop, chop, chop. Does this look familiar? What did we do? We're up here, and this is where the stops are. This is microstructure. Let's open it up. And what else is it? The outside edge of this. Stops are typically at the outside edges. Where are they? Above this swing. High volume structure. Let's label it. So here, when I see this, I don't know. So don't think I know. What I know is location. And if this is a distribution of volume, and I know stops are out here, and I also know I'm under the ETH low and the microcomposite volume point of control, which is the intermediate time frame fair price. If this is still too high and I have yesterday's low, high probability statistic open with sell stops below yesterday's low, why would I get long? I don't know. maybe you would. I want to continue the short, and this was a squeeze. Right here's my first opportunity for a potential short in this structure, looking for continuation. And let me come back to here. What happened over here? What is over here? High volume structure. I'm going to label this. You don't want me to forget what happened down here. My sellers got exhausted. Whoop, sorry, wrong thing. My sellers got exhausted, and that's my micro high volume. So this is too low. That's retail. So I'm going to do the same process on the other end. Why would I do that? I'm asking myself why I'm not pushing the right button here, unless I have a little glitch. Hold on. There. Trouble. Oh, I see why. Okay. So this is support. This can go. This was my resistance, right? From here. I'm going to remove this one, just so we have clarity. Hold on one second. Just trying to keep you from losing your mind. This is too high. This is my trigger. Now let's watch. So right here, I have my trigger. This is too high. I get a retracement. Why am I having a little trouble here with this? Oh, I know why. Sorry. So here, I get my break. I have resistance here at the high volume and out here. So in the microstructure, this is too high. Auction, break away. In the ideal world, you'd want to try to get it here. Let me draw a little box around it. I want you to see the structure and how I use it. Now, I don't sell the high-low. There's no perfection. There's no way. For me, maybe you, again, not me. The buyers were here. The sellers were here. No way to know it's going to fail until I break here. Then I have my micro high volume here, too high, and the sellers leave the store. Remember, I think of these as shopping experiences. That's what an auction is. It's shoppers. I get my trigger, and now I pull back. My resistance is here and here. So if I get a short on in here or here, my stop is above here or above there. Then where's my target for a scale ahead of this? Let's watch it. There is my scale, and then I'm going for yesterday's low here. Next target. And what time's it? Oh, it's 10:30. Okay. Post your questions. Now, I'm going to show you some other trades that I forgot to mention, structured trades, because, I get kind of myopic here. At 9:30, we have something called the initial balance. But before I go into that structured trade, and these are available in the 60 PDFs you can download in the Bookmap Discord Trader Lab community. There is no cost to become part of the community. They look like this. They cover a number of these structured trades and processes. I'm not a vendor. There's no cost for this, but you can learn a lot. Not to mention the community, and which would really, I think, is really different. And don't forget, if you by the end of November, if you haven't joined the Bookmap Academy, it is mentoring and tutoring for traders. There is no cost for that, and what it's about is submitting a trade, that's marked up with why and how, and then you have other professional traders give you pointers about how you might do better, just give you insights on your, to help you develop. And the winner of that will get 3 months of Global Plus, stocks and futures data included, a month of Discord Nitro, and a one-on-one coaching session with me where we get under the hood and we take a high-level view and address your specific issues, concerns, and questions. And again, this is something I do for individual traders on a very limited basis. I love doing it, but because there's such demand for it, I don't get to do it too often, but it is available to you. But you can get it, a one-on-one coaching session with me if you're interested, and that's open to everybody. But you do need to submit a trade example. And if you're not registered with the Bookmap Academy, there's links, and you can access all of that using the link in the bottom of YouTube and come over to the Bookmap Discord Trader Lab community. The other part of this is, don't forget there's a special Black Friday sale going on, and you need to pay attention to that because it might be the lowest prices you'll see for the year on Black Friday. You don't want to miss it. So what you need to be doing is get yourself over to the Bookmap Discord server. Again, there's no cost, so you'll be notified of this if you've ever wanted to get your hands on a high-tier order flow tool. When I started out with Bookmap, and I think it was in 2015, I really don't remember anymore, there was no sale. And it still doesn't matter. I'm thrilled that I made that investment because it's more than paid off for itself. Okay, questions, and let me look at your questions, and then we'll get back to the market. And by the way, if you're in YouTube, don't forget there's a link down there. You can access the Bookmap Discord Trader Lab community. It's a community of like-minded traders who come together. It's all about mutual support and growing together. If that's something you're interested in, come on in. Water's fine. And please give a like in YouTube. How are we doing here? Do you have questions? Fred, I would not take the short. Which short is that, Fred? Fred's asking me if I wouldn't take the short. I don't know where it was, Fred. You might want to refer to that. Let me get into the next structured trades while I'm waiting for Fred to respond. So we have a structured trade that sets up at 9:30 Central Time. Actually, there's two aspects to this. At 9 a.m., we have what's called the IB 30. The IB 30, there's a high probability that if we take out the first half hour's high or low, that then there's a probability we'll take out the first hour's high or low, and that's called the initial balance. It's referred to as the IB. Now, that being the case, if that happens, then what I can do is I'll be looking, first of all, if I'm trading towards this statistic, which I am, and I forgot all about it, because of that over 90% probability I take out either the first hour's high or low, and by the looks of things, we're going south, and over an 80% probability I take out yesterday's low. You might see why I am got the barge pointed to the south side. If you're asking me about this, Fred, no, there's no long here. So let's get into the IB. So IB right here, when I'm taking the shorts up here, which I think outside here, which I can't remember anymore, but this is the IB. Let me concentrate on this, the IB continuation trade. I consider this a primary trade, and when I shared these structured trades and decided to do Trader Lab, I provided examples of all of these. Now, like everything, and you should understand this, trading is not mechanical. Trading is contextual. If we understand that the context is down, the market is long, the sell stops under yesterday's low, we want to aim for yesterday's low to get into those stops and get longs liquidating. So then we use structured trades to try to attempt to get in alignment using these tools, the auction, understanding order flow, and taking shorts like here, or here, or here, going for the stat, which is going to open up at 9:30. Remember? So these are all valid shorts in my world. And here's the low volume node, the outside edge. Look at the confluence of elements. You can learn all this in Trader Lab. And no, it's not a 3-month experience and you have an ATM in the basement. Let's get real. So if you take the IB continuation trade, what you're going to be looking for, and let's look at this trade. Now, this may not be your trade, but let me show it to you. This is too high. I break low. I come to my next target, which is 16. This is another Trader Labs target. Now, at 9:30, which happened here, we have the IB. If you pull back here, you have a potential short. Right here, it triggers. So the IB, I believe we took it out here. Guys, would you confirm, did we break the IB here or at 9:35, or was it here? Because I can't tell. I have all my other charts covered up. Jazz, I'll try to talk about the market pulse for you. It does have some, I think, advantages to it. For me, it's auditory, so I hear what it's doing. I'm not looking at the pulse. I don't need to look. The beauty of market pulse is that it's auditory. So I'm looking here, but I'm hearing behavior. Here's microstructure right here. I'm going to put a little line. It's at the IB low. Did I break that IB where I was asking you in the Trader Lab? I haven't heard anything back yet. So this is too high. Break here. Break the IB, microstructure. You could take a short here. You got a scale here. Now that's called the IB continuation trade. I break high. Let's remember where our levels are. Resistance. Break low. Going back for this, the IB. Now we have the IB continuation trade. But what I know is this is too high. Test, too high. These are all shorts. Test, IB continuation trade. Support is here. You can see the structure. Watch. Resistance is here. Support is here. You can see the structure. Why? My buyers were here. My alignment is here. Now I have a statistic. I'm going for this. All these are shorts. Support, scale. Short, IB continuation. Yesterday's low, target. There it is. You could be done with the trade, or you're managing a runner for who knows where. Let's watch. Now, I don't know. This is an open target, not a recommendation. Let's see what's going on here. Oh, look at that. So you have resistance here. If you get yesterday's low, you get taken out. Let's look at the microstructure. Microstructure is here. Resistance is there. If I come back here and I get a trigger right there, micro high volume structure, I see my trigger here. I'm below my IB. This sets up a potential IB continuation. There is no precision. Watch. Buyers are here. Absorption. Sellers are below. There's your break. You could be shorting this. Stop over here, over the IB, and outside at the low volume node. Same as what we were looking at up here, right? So sequentially, what's happening is the market is accepting lower prices. Now you're asking me, and I'm going to come up and look at your questions in just a minute, why am I still going short? Because this is a level that was left behind that was too low. The day before yesterday, I believe. And if it's too low, what does the market tend to do? It checks pricing. That's called the auction. So if I couldn't get to the one that was above us, and I take out yesterday's low. Now, by the way, if you're in Trader Lab and we test it, you could be done with this trade. Or since we have a probability, and remember, this is shopping, of testing this, you're just going to continue trading towards it. Now, you're either managing your trade and you get taken out on counter rotations, and that's part of your psychology and trade plan, or if you're out, you put it back on, or you're done and you go to breakfast or get in the Barca Lounger. And this is your next target and you'd be done. Questions. This is Trader Lab trading. This is trading process. And notice what happened down here. Tremendous absorption. Now, if you understand order flow, when we come down and we have resting liquidity, this is also part of order flow. Look what comes in the book. If you have a high tier order flow tool, you'll see this. Now, it comes in here, and this is the same guy, stack, stack, stack. What is this? Limit order book. Now, the thing about the limit order book is, what is this? This is now how we're being helped. There's a stop sweep and absorption. If you understand sweeps, you'll understand that the market often reverses after a sweep. That's one component. The other piece is absorption, buying icebergs. All of this is a confluence with the resting liquidity. Now, here's the thing about liquidity. We don't ever have to trade into it. But doesn't that skew the book if those of us that have a dome can all see the stacking? And notice what is over here. This is the stacking. And it's a one large player. This is also in the order flow with Bookmap. We can see that most of this liquidity is one player. So this is the warning Will Robinson moment. And there's the break high. You'd be out of your short, and that would be it. You'd put your holster away, and you'd go have a lunch. Questions? Fred, I don't know which one you're asking me about, but no, there's nothing here. Other than this is covering. And even here, when you see this, let's look at this. I want to examine this for you guys, because this is about the auction. So we're sitting here in a vacuum, right? What do we know? How about this? We don't know. Do you know? I don't know. So what I have to do is narrate. So what did we do here? Microstructure, look to the right. I'm taking you down in, I call this microstructure, because the way the market tends to operate it's on top of itself, like a Matryoshka doll. You know, Russian dolls, how they're inside each other. That's a good way to relate to this. So as the market trades, it's trading in all fractals or time frames. Now, when I start getting down into microstructure, it's like tissue paper. The more volume that exists, the stronger it is. The less volume, the weaker it is. But I can read it. So right here, this is too high. The sellers are below it. I have absorption here, and I'm below the absorption. Now, I'm taking you deep. This is like a deep dive, so don't hold me to anything. Because you can't trade like this unless you get an education in Trader Lab. It is not mechanical. There's a number of components that are in alignment, okay? So when order flow is telling me here, sellers are here, micro volume structure is here, sellers are in control. Right here, I see absorption. Sellers are in control. Right there is absorption. So there's a buyer, which is this. Now I'm getting deep into order flow for you, just for a moment. Buyers are here. They're under the bus now. Sellers. I counter rotate. Where do we come back? There. Now I'm going advanced, and here's the outside edge of the consolidation. Now I'm giving you another tool. Sweep and stops. So we sweep. And what did you hear me say earlier in the stream? Often, and I'm using the word often, when you get a sweep, we break in the opposite direction. Notice what we do. Our micro high volume structure is here. And now this is advanced. And if you guys submit an example for one-on-one of a trade to the Bookmap Academy before the end of November, and you happen to win, which I hope all of you can win, in the one-on-one coaching I do, I can go as deep as you want. It doesn't matter how long you've been trading. I believe I can help you improve, because I can take you where, as they say, most have never gone before, into micro. And you can execute and trade in this if you develop the skills. Or you don't trade in this, you narrate it so you kind of know what's going on as it unfolds in the auction. So this is too high. And I'm way down in the electron microscope. My outside edge is out here, low volume node. Does this look familiar? See, the beauty of the auction is, since it's happening in all time frames or fractals, you can go down into microstructure for alignment. So outside edge, and right here is alignment for the short continuation, microstructure here. Is this too detailed for you? And what's the outside edge? There. Let me draw my little box around this. You see me doing something consistent? The casinos do something consistent. The outcome is random. Break low, trigger, resistance here, here, and here. So the sense is, if you were managing your trade, you can put your stop here. And once we break away, if you choose a breakaway, you can move it here or here. It's all up to you. There's no right or wrong to this. And then you get this thing. Look at this. Look at this. That is like, if that doesn't get your attention, then you fell asleep at the switch. How we doing, guys? How we doing in YouTube? Are you conscious? And don't forget our Black Friday deals. Now, and I won't be streaming on Friday, but don't miss out. You can go to bookmap.com, or if you really want to get there quicker, I think it'll be even better if you're in the Bookmap Discord Trader Lab community, because believe me, there's a lot of traders in there who are going to want to take advantage of this. And in fact, if you've been thinking about Bookmap, really, all I can tell you is this might be a great time. So our resistance is here, but this is the biggie. Right here, this is the anvil to the face. If you don't understand order flow and what Bookmap can do, when I see this time, and now here, let's look at what we got here. See this absorption? 1,300, and and there's 1,300 sell stops coming out here. Holy mackerel. So now for me, this is my target. I'm very content being done with the trade no matter what happens here. But if you were managing the trade, and this is a function of your personal trade plan, not mine, you'd just be trailing it down. You get this, now you got to look where it was too high, here or here. You break here. Now you see it change in behavior. You just punch out of the thing and forget about it. It's up to you, Here's your resistance. Now for me, trade would be over. There's nothing to do. Look where we come back. But I have no trade now. So for me, and it doesn't matter. That doesn't mean I won't keep trading. But in the Trader Lab, the goal in the Trader Lab is to help you become a professional trader, career trader. This is not a video game. This is about edge and statistics. Remember, the casinos only play games that have a vetted statistical edge. They don't make them up, and they're not looking to keep busy. They're looking to extract the dollars from the gamblers. That's kind of what we're looking to do in Trader Lab using a gaming process. I hope that makes sense. Please give a thumb up in YouTube. Are you guys tracking? How we doing there, guys? Need to know. And by the way, if you're visiting the Trader Lab, remember, it's not too late for you guys to mock up a trade. Join the Bookmap Discord Academy. There's no cost for that, and there's no cost to visit and participate in the Bookmap Discord Trader Lab community. It's a community of like-minded traders who come together to leverage their collective experience, and there's no cost for it to be part of this professional community. It's serious. It's about the business of trading, and there's a big gap, I think, in developing traders' understanding of what the business is, and part of that has to do with you get a software package that's got 200 indicators in it, and you go on the quest for the right mix of indicators and time frames. Unfortunately, most retail traders run out of time and run out of assets before they ever solve the puzzle. And you might find that maybe attempting to solve the puzzle that way is not solvable. And again, maybe it is. However, most traders in the Trader Lab have found that if you can understand market mechanics, then you can deploy an indicator versus using the indicator to define market mechanics and auction behavior, participant behavior. It's kind of backwards. Most traders don't understand how the market works. They're relying on some kind of interpretive indicator or to create confirmation and certainty because of our psychological wiring to avoid uncertainty and to be right. Doesn't exist here. The casinos can't do that. Why are we trying to do it? If that's what you've been working on, it's more psychologically generated, and this business is not in alignment with those needs. So Trader Lab will help you understand the business and develop a plan that may potentially help you achieve long-term success and a career path. The reality of trading is very different than what most retail traders think, and most of you spend your lives on on YouTube or cruising the internet looking for the holy grail. It doesn't exist either. Trader Lab is kind of a cold flounder in the face of reality, and if you're interested in reality, come visit Trader Lab on your journey. I think it'll help change the way you look at things. And then you can also talk to other traders in Trader Lab about their experiences and how the Trader Lab has contributed to their development and success. And again, Trader Lab's not for everybody. Many traders have FOMO. They don't have the patience to do the work to actually build out a business. If you've ever thought about having a business, or you were a professional or are a professional in any business, what does it take to become competent in anything? In this business, because it's counterintuitive, it's going to be more challenging to you because psychologically you're wired not to do the things that are required to be successful in this environment. This is like landing on Pluto. It is not the same as what you do outside of trading. It is shopping. So that's the only thing I've found that is somewhat consistent to our outside world experience, but everything else is unique here, and we have to separate it from our outside world experience. So confirmation, certainty, all that doesn't exist, and that's psychologically almost impossible unless you have statistics which make trading tangible versus making it up as you go, which is gambling. Once you create something tangible, you can manage your emotional states because you have something to hold on to. When you have nothing tangible, you're strictly guided by your stimulus, your fear, your emotional chemicals, the states in your mind, which you cannot control unless you have something tangible. If that's logical to you, I mean, if it's giving you something to think about, come to Trader Lab. There's a lot more to think about. And if you submit a trade to the Bookmap Academy, you have till the end of the month. You can register, just no cost, and you have a winning trade. You can get one-on-one coaching with me. I do offer it to individual traders on a limited basis. You can always DM me and ask me about it, but this is free one-on-one coaching. It'll be a deep dive, as deep as you need to go, whether it's on trades, trade management, microstructure, auction-based behavior, structured trades, emotional, mental issues that we all have, by the way. Nobody who's a professional trader has not walked in your shoes. The thing about it is, you can keep walking the same path, or you can learn from the investment you've already made. I call that trapped equity. We all have trapped equity. That's our experience. The problem that most of us have is we can't untrap the equity because we're just repeating the class over and over, derivatives of a process that might be defective. Yet because of random winnings, it keeps us doing the same thing. Trader Groundhog Day. That was my experience. And if that's yours, we're all the same. And you can learn to differentiate that. So what is real and what is Trader Groundhog Day? What can you take from your experience and convert it into yield? And what can you take from your experience and not continue doing it because it has no yield? Something to think about. Please give a thumb up in YouTube, and don't forget the Black Friday specials, and I will not be streaming on Friday. So come to the Bookmap Discord Trader Lab community so you get clued in on the specials. There's no cost. Use the link in the bottom of YouTube, or go to bookmap.com on Friday. Put it in your calendar while you're digesting your turkey and hitting those leftovers. I'm not sure if turkey dinner is the best part, and I know other people go, hey, I'll deal with the dinner, but give me the leftover turkey sandwiches. I don't know. I'm kind of open-minded for both. Are you guys with me? How much of a discount? No, they won't even tell me, Reggie. Hey, Joe, this is one example. I don't know which trade you're referring to. We've had a number of trades this morning, long, early, and then all shorts. So, and that's, you can, by the way, you can go to the Trader Lab, this stream will be available exclusively to Bookmap Discord Trader Lab participants. You can use the link in the bottom of YouTube. There's no cost. You won't be solicited. And you can become part of that community and learn these trades and how to think in as far as the business of trading. I think we've had, depending on your, when I say we have had, I'm talking about structured trades. There are many other trades and more advanced processes that I share specifically for Trader Lab participants. This is a broad stroke, but those of you who follow the stream, you probably see that the process is consistently applied in a random environment. This environment is random, same as casinos. What was the question here? Yeah, Fred. Can I show this in Go Charting? I'm sorry, I don't use Go Charting. So I can only show you in Bookmap because this is, to me, is a high tier order flow tool. And if you don't have order flow, you're kind of, in my opinion, again, it's, you're missing out on the ability to be here now. I can read this with the order flow and see a rotation. Those who use charts, time-based charts, and they're all fine, can't activate here or understand why we came here. I do. Doesn't mean we're going to zero. It doesn't mean we're not going to hold this level. None of that is what this is about. The micro high volume structure is there. It's support right here. The outside edge is up here. This is microstructure resistance. So I don't have a trade here, but what I'm doing is I am reading it. If I can use order flow to read this, it allows me to activate if I have a structured trade here, and I'm not saying I do. I don't make trade recommendations naturally. I understand what this is. My sellers are here. My sellers are here. My buyers were here. My buyers are here. My micro high volume structure is there. It's support. Resistance is out here. I don't have a trade, but I'm able to read it. And this is a big deal, what happened here. So this might be the low of the day, And again, it doesn't matter to me. I'm not here to try to trade this stuff. It's not my job. My job is to be short from up here down to there. That's my trade. Or short from here into yesterday's low, or short from here with your all Trader Lab shorts down to here. That's my trade. This is kind of where I do my thing. And how many of these do you need? You see, that's what trading is. Trading isn't doing this. That's a video game. I think if anybody's going to play a video game, they should play a video game. But this is not where we play. This is business. Hope that makes sense, and I hope you guys are getting something out of this. And don't forget now, Trader Lab's available to all of you at no cost. There are 60 PDFs you can download from the Trader Lab of these structured trades and a library of webinars that you can also watch. And this is exclusive for Bookmap Discord Trader Lab participants, not to mention my participation. Basically, it's a global coaching process for all of Trader Lab participants. Plus, when I get the chance, I will help individual traders if they ask. Not a problem for me. I have a soft spot for traders because of what I went through. And remember, if you are in Trader Lab, submit your examples for free mentoring and coaching to the Bookmap Academy. And if you're not part of Bookmap Academy, register for it. You can win 3 months of Global Plus, stocks and futures data, and one-on-one coaching session with me. And we'll definitely do a deep dive wherever you need it. It'll be specifically for you. And I think that's something that you guys might find useful. So even if you're in Trader Lab or if you're out there in YouTube land, it's not too late to mock up a trade and submit it for the coveted Blue Jacket Award and a one-on-one coaching session with me. Please have a great Thanksgiving. Don't eat too much. If you don't have a trade plan, Friday, if you're going to be taking it easy, and laying on the couch, digesting, maybe watching American football, whatever your thing is. Think about trade management, think about the business of trading, but be sure to be balanced, spend time with family, take a break, and then you have all weekend. And if family is in visiting or you're visiting them, make good use of the time. We all need a break from trading. We need balance in our lives. There's always another day to trade, but we always don't get an opportunity to have balance and spend time with the people that are most important in our lives. Please give a thumb up if you're visiting in YouTube. Appreciate you guys stopping by and visiting the lab today. Those of you who are interested in Trader Lab and building out the business of trading, use the link in the bottom of YouTube. Please leave a like, subscribe to the channel so you don't miss out on these. Typically, these streams are not available unless you're in the Bookmap Discard Trader Lab community. There's no cost to be there, and it's leveraged. The community is like-minded traders. Our senior trader has over 50 years experience. I've got 45, both professionally and individually now out here with you, and I'm happy to share all the things I've learned and all the things I had to change and undo in order to have the opportunity to continue developing. And I can tell you this, whether it's 4 months, 4 years, or like me, 45 years, you're always going to try to get better. And you need good tools, good coaching, good mentoring, and a great environment with good support from other traders. Thanks again, guys. Thanks for visiting a Trader Lab, and I look forward to seeing you guys on Monday. Catch you then.